What will Governor Murphy's proposed budget mean for New Jersey? Listen as we break it all down. This is the IssuesWatch Podcast. Hi, I'm Jeff Kazerman, Vice President of Government Relations at the New Jersey Society of CPAs, and welcome to the IssuesWatch Podcast. On March 18th, we held a live broadcast with two public policy experts, Richard Keevy and Dale Florio. The point was to examine Governor Murphy's proposed budget for New Jersey's 2023 fiscal year. In this podcast episode, we're going to share segments from the live broadcast. Rich is a distinguished executive in residence at the Rutgers School of Planning and Public Policy. He's also a lecturer at Princeton University. Rich brings a unique perspective, having served as New Jersey's budget director and comptroller under two different governors from each political party. And Dale is a strategic advisor at Princeton Public Affairs Group and is considered one of the top lobbyists in New Jersey. He has worked on behalf of the NJCPA for years. Before we hear from Rich and Dale, I'll get things started with some highlights of the budget proposal. But I would also like to mention that we did have some audio issues during the broadcast. So I apologize that sound quality is not as good as usual. Okay, here are the highlights from the budget. The proposed budget is $49 billion, an increase of 5.6% over the fiscal year 2022 budget that was enacted on July 1st of last year. This budget assumes revenues for the current fiscal year will be $4.5 billion higher than originally projected. The total fund balance, including the rainy day fund, is decreased from $6.2 billion to $4.2 billion. There are no tax increases in this proposed budget. Under a new property tax relief program called Anchor, relief to homeowners and renters is increased by $500 million. It'll benefit about 1.8 million homeowners and renters. Over 3 years, it'll rise to a $1.5 billion program annually. There's also $650 million increase in the school funding formula, which brings it from $9.35 billion to $10 billion. There is an additional $68 million for preschool education aid. $430 million has been allocated for new school construction and capital maintenance, and another $400 million for higher education construction. The proposed budget includes a $6.8 billion pension payment, making this the second consecutive annual payment that meets the actuarially determined contribution. Also included is a $1.3 billion deposit into the Debt Defeasance and Prevention Fund that will raise the amount in this fund to $5 billion. There's about $150 million for small business relief, which includes $50 million for the state's Main Street Recovery Program, and $300 million from New Jersey's share of the Federal American Rescue Plan Act is allocated to build 3,300 new affordable housing units. Off budget, the state has not spent about half of its $6.2 billion in ARP funds, American Rescue Plan funds. It will also be receiving about $12 billion in federal infrastructure aid over the next several years. So now, turning to our experts, I asked Rich whether he thinks this is a good budget, a bad budget, or somewhere in between. Here's what Rich had to say.
Well, I would have to say it's a pretty good budget. I think you cover most of the highlights of it. I'll have a few additional observations I won't pass on, but we have a good surplus, maybe a little bit lower than what it was what it's going to be in the current year. We're going to be down $2 billion, but we could chat a little bit about that computation in a few minutes. But let me just refresh for some people who may not follow the state budget all the time. 47% of all the spending that's in the budget is for property tax relief or state aid. It's money that the state is sending out to municipalities, school districts, and to individuals. And then there's another 28%, again, that the state is sending out to other folks to purchase services. For example, the most expensive area in that is the Medicaid program and the Affordable Care Act and higher education and transit subsidies, assistance for people with developmentally disabled, mental health. All those programs are run by nonprofits or other entities other than the state, and we're providing the money. Another 5% is for debt service. We chat a little bit about that, about what the state has done to reduce the overall debt of the state. And finally, about 20% of the budget is what I would call the operating budget of the state. Money that's spent to run the day-to-day operations of the state. And of course, the fundamental new program that the governor has emphasized here is the expanded homestead rebate. $2 billion of direct services goes entirely for property tax relief. And the new program, also very new, changing the old homestead rebate to a new one. And based upon one's income, there's a payment out to those people. And we can chat about that as we go into more details. The school aid is interesting because there's been a lot of controversy about what districts are getting money and what districts are not getting money, and whether there should be money for certain districts who were decreased in funding. My take on that, again, we could discuss it later, is that it's funding the formula as laid out that met the constitutional requirements. So those districts who have more need based upon they have less income and less wealth based upon property value, they get more money of the state government. And those districts who can raise money on their own get less money. And as Jeff pointed out, this is the largest school aid budget that I have ever seen. And of course, all that money goes back to state and local governments. And as you also mentioned, the pension fund is again funded for the second time to meet the ARC, the annual required contribution. They haven't done that for a long, long time. I have to say, the last time we fully funded it was back when I was a budget director almost 25 years ago. So that's good. And we're defeasing the bonds that were, I might have to say, when we spoke about this last year, I said that it was a mistake for the state to issue the bonds for operating purposes. Their retort to that is, well, now we're going to defease other bonds, so we'll kind of make it neutral, so to speak. A couple other things that are worth commenting about, and that is the appropriations are $1.7 billion greater than current revenues. So that could be a problem in the long run. But we do have a good surplus. And I would say the governor has really stepped out to help the property tax owner. One final observation. I might say to the governor, you should have given more property tax relief to the folks with lower income, as opposed to funding property tax rebates up to people with $250,000. But that's a personal view. And I think the governor's view probably was, well, I want to give as wide a property tax relief as I can, not only to those who are struggling, but also those with higher incomes, because they do have higher property taxes. So it's a well-structured budget, good property tax relief, lots of state aid, good social programs, expanding the Medicaid program, lots of aid for those folks who need assistance, including people who are people who are coming in from other countries who are not quite American yet. But they need assistance, and the governor has put money in there for that purpose too. So I think a well-rounded, pretty structured budget. The governor wants to expand the rebate program over the next couple of years. That's a good goal, and I think it's worth stating that it's a goal. Whether or not be able to finance that over the next 3 years, yet to be determined.
And here's what Dale had to say.
Anytime a governor can say, and we're not going to raise taxes, people automatically stamp it as a fiscally responsible budget. And you're right. These are unprecedented times. In my career, I have never, ever seen this kind of money available to a governor and to the legislature. And as you said, we'll never see it again. Most of the time, you're scrounging how you're going to make ends meet. what line items are going to get reduced, and should you consider tax increases? So if there was a time that New Jersey should consider putting a 2-year budget together, this would be the time. Because we tend to look, we write these budgets in 1-year increments, and we're not focused on fiscal year the following year. And the ARPA dollars are not going to be here. And now would be the time for the legislature and the governor to tackle the 2 pressing issues that will still be with us once these funds are depleted. And as we get into it today, you will find out where it's going to go. And yes, in 2 years, we'll be singing a different song. And the 2 issues are pension reform and school funding formula reform. Rich appropriately pointed out that the governor's funding the existing school funding formula, and that's fine. The problem is that formula is a creature of 2008, and so much has changed in many of our school districts. Over 200 school districts are going to get less in aid this year than they did the year before. So again, the districts, the number of kids, the number of teachers needed, it all has shifted, but therein lies the political dilemma. And but unless we address pension and school funding formula, we will be singing a different song in 2 years. Now would be the time to do that.
The governor had a lot to say during his budget address about fiscal responsibility. Before finding out where Dale and Rich weigh in on this, let's hear what the governor had to say.
None of what we aim to do going forward would be possible without the impacts of the past 4 budgets in firming up our state's fiscal foundation, meeting our obligations, and prudently investing in our future. We were once a AAA bond-rated state. We were looked at as a model for principled fiscal stewardship. We were considered a smart bet and a safe investment. Over several decades, across administrations of both parties, we had gotten away from that. We've had nothing but a string of downgrades, 11 of which were received under just the previous administration. Last week, happily, we received direct proof that the financial course we are following is the right one, with the news that Moodys upgraded our credit rating. If you can't remember the last time we got a Moodys upgrade, it might be because you weren't born yet. Moodys has only upgraded New Jersey once before, in 1977.
In my opinion, it is overall a fiscally responsible budget. But I asked Dale what he thinks.
Back to my point that our budget structurally remains a problem, camouflaged by pandemic dollars and revenues that exceeded expectations. Reminding everybody that based on tax increases the governor did in his first term. So, again, I think there's plenty of there's clouds out beyond the horizon, maybe 2 years, but we shouldn't be giddy about how good things are. And I think the governor, if he had provided a little bit more history on the rating agencies, you could see that really Moodys is the only one that gave us a bump.
And when I asked Rich the same question, whether the proposal is fiscally responsible, here's what he had to say.
I think in general it is, but I want to pick up a point that Dale made, which is very, very interesting and a good point about a 2-year budget. There are 26 states that do biannual budgets. And it would be very interesting because, as I mentioned earlier, the revenues are about $1.5 billion less than expenditures projected for next year. So that suggests, as Dale was leading towards, a problem for the following year. Furthermore, it would really be good if the state would provide a current services projection as to what the budget looks like over the next 2 or 3 years, making assumptions for revenue and making assumptions for funding those programs that have to be. And people would look at that over a 2 or 3 year period of time and say, oh, maybe we can't quite do all the things that the governor now says he wants to do. Or maybe the conclusion would be, it looks pretty good. So there are still out year projections that are at least somewhat troubling to me at the moment. Having said that, I do want to make another observation. The revenue estimating from the state for the last 3 years has been, to say the least, not very accurate. They have been way underestimated. And as you pointed out, this year's budget in the current year has been revised upward in revenue significantly. And a quick look at the next projections for fiscal 2023 would also suggest to me that they're on the lower side of the equation. So from one point of view, that's good. You should be very conservative and cautious. But that also argues for Dale's point, well, let's make this a 2 or 3 year viewpoint so we can better understand what we're committing ourselves to.
Next, we moved on to property taxes. This is, of course, a perennial issue in New Jersey. Governor Murphy has proposed an expansive new property tax relief program called Anchor. This is what he had to say about that program during his budget address.
Moreover, this budget takes on the most stubborn affordability challenge that has faced our state for decades: property taxes. Today, I am putting forward the Anchor Property Tax Relief Program to deliver direct property tax relief to nearly 1.8 million middle and working class and senior households, whether they are homeowners or renters, households, by the way, in which well more than half of our residents live. Anchor formally stands for Affordable New Jersey Communities for Homeowners and Renters. Through Anchor, more than 1.15 million homeowners with incomes up to $250,000 will receive direct relief averaging nearly $700. More than 600,000 renters making up to $100,000 will receive as much as $250 in relief. And then over the next 2 years, we intend to continue building up the Anchor program until it meets the funding and relief levels promised by the state's 2007 property tax relief law. When that day comes, we will be providing direct property tax relief for homeowners that will average more than $1,150 per household.
This all sounds great, but it's an extremely ambitious program that comes at a cost. It would increase property tax relief costs by $500 million, making it a $900 million program in 2023. And over 3 years, it would increase to $1.5 billion. I asked Rich and Dale if it will survive the next economic downturn.
Well, that's the big question. To think we're going to grow it up to $1 billion, almost $1.2 billion, as the governor suggests, is a good goal. My reading of the numbers would say that would be very, very difficult to do. But I would be more critical of how the money is being allocated. I'm kind of the point of view of people at the lower income level who own homes and or renters who are in lower income should be getting more money than the governor has proposed. The governor, for example, people making up to $250,000 will get an average $550 check back. And somebody who's making under $100,000 might get $700. I don't know whether I would tilt it that way, but that's a matter of philosophy. And my philosophy says if you had a really good circuit breaker program, you would be giving more money back to those people with lower incomes struggling with paying property taxes. So I have two views to it. It's going to be hard to extend it into the future. And secondly, I would have reformatted it differently and given more money to people who live in homes with a lot less income than $250,000.
Listen, there are a lot of smart people listening to us today that deal with numbers all the time. And this program will be no different than any other program. I think Governor Murphy's Anchor program is now the fifth or sixth renaming of the take it out of one pocket and put it in another. The the issue of surplus and then using rebates to give money back to people always begs the question, are you better off to lower sales, income taxes, or are you better off doing the rebate? Politicians over the years, both parties, have decided it's better to do rebates, because if I'm raising taxes or a sales tax, that affects everybody. But if I do rebates and I've got to cut them back, it's money I'm not getting back today. It's like you're filing your tax return. Oh, I'm getting money back. The rebate, same thing. Well, okay, my rebate check now, it was 1,000, now it's going down to 500. But at least I'm getting 500. So in their minds politically, it's different. But let's keep in mind, right? This program, it increases the spending by over $550 million from last year. These rebates will not be provided until May of 2023, conveniently right before the legislative elections, primary-wise in June, and then the fall legislative elections. This overall number is 1/8 of the $4.6 billion overtax collection in the current year, while the administration keeps the remainder, for unknown spending. And you can talk to Democrats and Republicans in the legislature. They don't know. I mean, there is no plan for that off-budget dollars. So, if you're getting back maybe 2% of overall property tax contributions with a 2% anchor program, do the math. It's not much, and it's certainly not sustainable going forward.
Next, our discussion turned to small businesses. In my opinion, there's not enough aid for small businesses in the budget, and little recognition that they provide jobs for the very people the governor is trying to help. I asked Dale if he thinks there's enough aid in the budget for small businesses.
Well, I guess, Jeff, it really depends on where you sit and what you consider to be small business. I was working on a piece of legislation the other day which would provide tax credits for small businesses in terms of winterization, and it was set at 10 individuals, 10 or less, and right intention, but the sweet spot's probably anywhere between 10 and 50 in terms of what small business is. You have to go back to the pandemic and the dollars that were flowing from the federal government over the last 2 years, and that were geared toward providing support, in this case, business people. I give the governor credit. He and his team put together a lot of programs through the EDA for this purpose. The problem I kept hearing from a lot of businesses, though, the grants were very small because they tried to spread them around, and it really played more to that very small person, that small business, right? 10 or less. And if you're a restaurant, not only could you not find people, but getting grant dollars, which might help you retain people, would have been very helpful. And so you're anywhere between, you're certainly north of 10, and you could be south of 100. So the only other comment I'll make is that when you put your first slide up that showed how the major dollars were being distributed, you had small business left, and it was the smallest number you had up on your slide, 150 million. Everybody else was in the billions for this, billions for that. Arguably, we still have federal dollars that were intended to help entities, individuals get back on their feet, and that's what the money should be used for, as a kind of a release point, an endemic, as everybody's now saying. And I'm not sure that that's the case. So 150 million compared to what else you see in the budget doesn't seem like a lot of money to me.
Then I asked Rich whether Dale and I are being too harsh on lawmakers as far as relief for small businesses is concerned.
Well, I've always been of this view. We got a lot of money from the federal government to do a lot of different things. And I think the last number I saw was about $3.5 billion has not been utilized yet. And it's not in the state budget, as far as I can determine. And that's the kind of money that can be used for these kinds of issues for small businesses. We don't need any of that 3.5 billion, in my judgment, back into the state budget. We're pretty socially oriented budget in New Jersey, which from my point of view is good. But we have all these small businesses struggling out there, and we have this sum of money sitting there that can be maximized and used for small business development. And a lot of that money, I think, by definition, will be one time to get them started again, back on their feet again. And that's exactly a good use of this kind of federal money, of which was provided to the state. And I don't know, as Dale pointed out, I'm not sure why we're not utilizing it. Some of my friends on the Republican side of the equation make the same point. We have these monies. We should be using them for this purpose and not sitting on them, hoping to use it perhaps to help balance the budget in 2 or 3 years from now.
Next, we turn to taxes. For the second year in a row, there are no new taxes or tax hikes. However, in my view, with the billions floating around, there should have been some tax cuts. So I asked Rich whether I'm being unrealistic.
You might even guess which direction I'm coming from. I'm not in favor of reducing existing tax levels. I'm not going to argue that the state doesn't have high taxes. We do. We have a lot of high services provided in the state, and we do a lot of things that other states don't do. And depending upon your point of view, some people might say, yeah, well, we shouldn't be doing those kind of things, and therefore cut the taxes. So I don't come from that point of view. And from a strictly financial budget point of view, once you start cutting taxes of a significant amount this year because we have a, quote, surplus, the next couple years comes along and that money isn't there, which I think would be a mistake. I have to agree that there's people on the left and the right of that argument. The more conservative view would say, well, if we don't have the money because we cut the taxes, then cut the programs. And then again, you'd have to come back and discuss what it is you're reducing. And I would say, since the majority of this money has been going for things that I think are important, other people may have a different view, I don't think it's a good idea to cut taxes. You'll lead to problems in the long run. People will turn around and then we'll have taxes going up. So sure. I'm not concerned about the fact that we didn't cut taxes. I personally, as a taxpayer, don't mind the tax rate being high for the folks over $1 million. But I think a good tax structure is important for the state, and we shouldn't be monkeying around with reducing rates and running into problems in the long run. So that's a long story that says, don't cut the taxes.
Then I asked Dale if he thinks we'll see tax hikes once all the federal money runs out, and whether we'll ever see tax cuts in our lifetimes.
I don't see that, Jeff. I mean, we're already at the top end. I mean, Rich can fill in the blank here, but I think we have the highest corporate rates. Our income rates now, you know, I'm all for graduated rates. If you make more, you know, I don't have a problem. You pay a little bit more. But I think we're at the top end on that as well. So at some point, you know, it's unsustainable unless you talk about, you know, where you should be looking at how you're spending your money, right? When you have good years like we have, the pressure to look at the expenditure side becomes less of a focus. So if we're going to keep the rates the same, you know, we should be able to work within that. But I think that's where you see Republicans and Democrats need to spend more time. And I think the legislature will, but they need to spend more time looking at, you know, how we're spending our money and be willing to make adjustments each year. And that's, you know, that's one of the failings of the political system, that they don't do that because cutting isn't fun, or reallocating funds to different programs, not fun. And so I don't see a reduction in rates, but we're hoping that they would take a look at, you know, how they're spending their money and not be afraid to move it around to priorities, because priorities shift.
Our next topic was the public worker pension system. The budget includes a $6.8 billion pension payment, which would meet the actuarially required pension contribution for the second year in a row. This has been applauded by groups across the political spectrum, including the NJCPA. Since health benefits are a few more billion, I think it's fair to say that pension and benefits make up roughly 20% of the budget. I asked Rich what shape our pension and benefit systems are in and what the numbers are for the state's unfunded pension and health benefits.
I can give you some background. And before I start, the way to look at this quickly is to go to the last state's official prospectus. In that prospectus, there's a whole bunch of information about the pension system. So the last one I looked at was I think it was in early January. So based upon that data, which is pretty up to date, and the state has to have full disclosure in these official statements, we're at 50% funding. So we're still one of the worst funded states in the country. And if you look at the charts that project those things out, if we continue to meet the ARC requirement, and if the projections in terms of what we think costs are going to be into the future are correct, and they're projected by the actuary, we won't get the full funding until about the year 2045. If the state continues to meet its ARC, and if the investment earnings continue on the average of 7%, and if we use proper discount rates for projecting future expenditures, that's how long it's going to take for the state to get to full funding. One other point before I get off. I was part of the what I would call Senator Sweeney's project that looked at future pension costs. And I agreed with the senator that we ought to change our pension system for new employees. It's too expensive. It costs a lot of money. And when you go out to, if it takes 20 years to get back up to 100%, that's not going to happen because there's going to be intervening problems that develop. So Senator's proposal was if you're a new employee, you have to go into a modified IRA system. We're not going to change anything for the existing pensioners, but we do need it for new people. So that's the only real solution to the long-term pension problem. It's better than when it was. In the long run, it looks pretty good. But in the short term, we need to make more radical changes. We have similar problems on the healthcare. They're underfunded also. And as you probably know, we fund the pensions, the healthcare on a pay-as-you-go basis. There's no money set aside for the long-term cost impact. And the out-year liabilities for the healthcare system, not as large as the pension, but they're pretty big if they were on an actuarial basis.
Dale had this to add.
I know some folks are tired of hearing about the pension, but I agree with Director Keevy there. That is the issue that drives and is the underlying belly to budgets year after year after year. That's the warning sign. If anybody takes anything away from today's session, that's what needs to be done. Political will, very difficult to say. And the professor might be able to back me up on this, but the pension system and funding it has always been, for the most part, a bipartisan issue. Everyone acknowledges that the state needs to make that contribution. And honestly, the Governor Murphy's proposal basically followed Chris Christie's plan of increasing the payment over a 10-year schedule when it would finally hit full payment. Murphy, to his credit, actually reached the goal 1 year earlier. So then in year 9 versus year 10. So, but keep in mind, he raised taxes early in his administration, and he borrowed $4 billion as well. So would he have gotten there without those things? I don't know, but this was a 10-year plan that was in place. He did hit it a year early. He should actually, with the amount of money he has, he should make prepayments.
The next step for the governor's budget proposal is a thorough review by the legislature. I asked Dale whether he thinks the legislature will make any significant changes.
Not really. I do think there is an interest in making sure that, especially places like the Department of Labor, have the money that they need to fund infrastructure improvements to their technology platform. The commissioner came before the Senate Labor Committee the other day and, received a lot of challenging questions. So I think there's that. But I don't see any major changes. Jeff, I think that the governor will probably hold out the fig leaf or whatever that, there are ARPA dollars here. So if there are other projects that we need to take a look at, we can talk about them after this budget is done. Not the best way to handle taxpayer dollars. But I think that'll keep the legislature in its place, and you won't see very many different changes.
Then I asked him whether he thinks the business community will be able to persuade the legislature to add money to the Unemployment Insurance Trust Fund and other programs to assist small businesses.
There is a big push, and I think there's a good chance the business committee will be successful on the unemployment issue. I mean, if there's one issue that all employers can get around, it's certainly that one. Individual grants, low interest loan programs are difficult because they tend to be generic. The legislature, the governor, as I said previously, did not do sector programs. They just said business generally, and again, they used a small number of employees, and the grant sizes weren't that big. So I think our best hope, Jeff, is really on the unemployment side, and I think there is momentum for that, and the business community is certainly united there.
As we wrapped up the presentation, I asked Rich and Dale for their closing thoughts. Here's what Rich had to say.
Well, I pretty much summarized what I previously said. A more than acceptable budget. I would restructure the homestead rebate in a different format. Other people have different views about it. And I would like to really pick up on Dale's point. We need to look more carefully at the out years. A 2-year budget would be interesting. I mentioned 26 other states do it. And it would demand that the state look more into the future so that the taxpayer and the legislature would understand what it looks like in the next 2 or 3 years, as opposed to just focusing on year one. So if I could make one big change in the whole budgetary process, it would be to be keeping to look out for 2 or 3 years so that you don't make poor decisions in year one because you got a little extra money.
And now here are Dale's closing remarks.
Going forward politically, for the first time in over 10 years, we have a new leader in the state Senate. And, for observers today, I mean, you can't overestimate the impact that will have for the next couple of years. It's huge. We don't know, where the Senate will go, what it will do. And the Senate is a very active participant in this process. So unanswered questions there. And, we've talked about the budget all day and fiscal impact, but with the new leader, you won't necessarily see his fingerprints on this budget as much. But I think going forward, it could be different. The assembly leadership is the same, but when you have a change like that, it is significant.
Big thanks to Rich and Dale for joining us once again to dissect the governor's budget proposal. I know I learned a lot, and I hope you did too. Thanks for listening and watching.